Hello, my name is Brent Isaac and welcome to the Tutor. Today we are going to look at the journal entries and the ledger entries. Okay, so we are going to look at the source document, journal, types of journal, ledgers, types of ledgers, accounts, types of accounts, and trial balance. So we are going to start with the journal source document. So the source document, we have receipts, we have invoice, we have the bank statement, we have the checks, we have the credit note, we have the debit note. Okay, so with the invoice, it is a document that is used to request for payment of goods and services. Okay, so if I sell something to you and it's not paid yet, I will issue you a document requesting for the payment of the goods and services. Okay, good. And also we have receipt. Okay, receipt is a document that is used to confirm cash payments and receipts. Okay, so if I buy from you, you issue me a receipt showing that, oh, indeed, I've received this good or paid this good. You get it. And we have the check, which is used for deposits and withdrawals. We have the bank statement, which is issued by a bank to the account holder, indicating or detailing the transactions of the account holder. You get it. And we also have the credit note. The credit note is issued by the seller to the buyer, indicating that the goods returned by the buyer has been received. You get it. And we also have the debit note issued by the buyer to the seller, indicating that the buyer has returned goods to the seller. You get it? Good. So we move to journal. What a journal is. So a journal is a book that occurs chronologically. When we say chronologically, it means step by step, date by date. You get it? Good. It occurs and also in detail, okay, in detail the transactions of what traders or business. Okay, so with the types of journal we have sales journal, purchases journal, returns inwards journal, returns outwards journal. We have general journal and we have cash book. Okay, so the first one, which is the sales journal, is used to record credit sales. Okay, so we are going to record all the sales made on credit that we not receive payment for it. Okay, so all the sales on credit will be recorded in the what? Sales journal. Okay, because we said the sales journal is going to be used for recording credit sales. Sales we made on credit. Yes. And we have the purchases journal, which is used to record credit purchases. Okay, so the purchases that we made, we the business made on credit, we are going to record them in the what? Purchases journal. You get it? And we have the returns outwards journal. Okay, so any purchases returns that we made, we are going to record that those transactions in the returns outwards journal or purchases returns. Okay, these journal are also known as the day book because they record the day-to-day transactions of the business. We also have returns inwards journal, which is used to record the returns inwards of the business. Okay, the sales we made, the returns inwards from our customers. They get it. Good. That's what we are going to record in the sales returns journal or the sales returns inwards journal. Okay. Then we also have the cash book. The cash book is a book or account that is used to record cash payments and receipts or bank payments and receipts. You get it? Good. So with the cash book, we have three types. We have the single column cash book, we have the double, we have the three column, or we have the double or two column, and we have the three column cash book. So with the single column cash book, it is used to record the payment of cash and receipts, and the receipts of cash. You get it? Receipts and payment of cash. So with the cash book, like this, the single column cash book is like this. So this is the payment side and this is the receipt side. So when we receive cash, we are going to what? Record here. And I said in the introduction to accounting that this side is our debit side, showing an increase in our cash. Okay. So if we make payments, we are going to record that transaction there. But so this is the what? Single column cash. So it records cash payment and receipt. Or sometimes it can be bank payment and receipt only. Okay, so mostly it records the cash payment and receipt only, but it can also record the bank payment and receipt only. You get it? It records just one item. Good. So we have the double or two column cash book. The two column cash book records both the cash and bank transactions. Okay, so it's something like this. Then we have our bank column here, then our cash column here. Good. Then details or particulars, then our dates. Same to the what? Credit side. The date to be here, details, cash here, then bank here. See, same to our credit side. Good. So you could see that it what records both the cash transactions and what bank transactions. Both sides are the what debit and credit. So when we receive cash, we record it at the cash column because the debit side is the receipt side, showing that we received cash. So if we receive check, we record it at the bank column. You get showing an increase in our bank amount. Good. So when we make payment in respect of cash, we record it here. When we make payment in respect of checks, it will be recorded here because this is the payment side and we have the what receipt side. Good. We also have the three column cash book, which is used to record the discount and the cash and bank transactions. You get it? So with the three column cash book, we will have discount allowed here, then the same thing. So it's only an addition of the discount allowed and received. Okay, the discount allowed and those we receive. So here to have discount received here, now cash and bank. So you will see that a single column cash book will cost only one of these items. Either it's recording cash only, okay, it's recording cash receipts and payment only, or it's recording bank receipts and payment only. Okay, so when we come to the two column or double column cash book, it records the cash and bank. These two, do you get it? So we will see the cash and bank at the credit side, which is the payment side. Then we'll see the cash and bank also at the debit side, which is the what? The receipt side. When we come to the three column cash, we will see the discount received here at the right side and the discount allowed here. Do you get it? So why the discount received is here? In simple terms, I will say because we are making payments for cash. When we make payments for cash, that's when we are going to receive discount. Okay, good. So when we also allow or receive cash, that's when we receive discount allowed. That's when we receive discount. Yes. So this is for cash book. Then we move to the general journal. Okay. So the general journal is used to record any other item apart from the ones we mentioned, which is the sales journal, purchases journal, returns invoice journal, the returns outwards journal, the cash book. So the general journal is used to record any other item or unusual transactions that are not recorded in any of the journals I already mentioned. You get it? So the journal is used to show the opening entries, it's used to show the closing entries. It's also used to correct errors. You get it? Good. So we move to the ledgers. Good. So the ledgers, I would say, and we all, it's a general thing that we know that the ledgers is the king of all books. Okay, because from all the items that we record in the journals is what we got posted or transferred into the ledger. Do you get it? Okay, so the ledger is also a book that contains a condensed record of the pecuniary transactions of the business. Okay, so when we say pecuniary here, it means the financial, the transactions of the business. That is generally brought or transferred or posted from the books of original entries. Okay, so the ones we record in the journal is what we transfer or bring them or record them in the what? Ledgers. Good. So we have the types of ledgers. We have the subsidiary ledgers. Okay, that one contains the sales ledger and the what? Purchases ledger. So in the sales ledger, it records the personal account of what? Customers. Okay, good. And it shows the amount of amount our customers owe us. Okay, good. And also the purchases ledger records the personal account of what our suppliers. You get the amount we owe our suppliers, and it contains the number of suppliers that we also owe. Then we move to account. Yes, we move to account. So account is simply a ledger, okay, that is used to record or shows the detailed explanations of a transaction. Okay, good. Then we have the types of account. We have the personal account. We have the impersonal account. The personal account records the transactions of persons or what business transactions. And we have the under that one we have the debtors and we have the creditors. You get it? The personal transactions. Then we have impersonal account. Okay, that one is also used to record any other account transaction apart from transactions of people or what business transactions. Under that we have the nominal account and we have the real account. The real account is used to record tangible items, okay, possessions of all kinds. And the nominal account is used to record expenses, losses, gains, and revenues. Good. So with that, we move to the trial balance. So with the trial balance, it's used to show the balances of the credit and debit entries. Okay, it is used to show whether the what followed our double entry principle. Because you know that for every credit entry there will be a debit entry, and for every debit entry there should be a what credit entry. So at the end of the day, we should get our credit balance, our total credit balance equal to our total what debit balance. Do we get it? Good. So that's all for the general entries and letter entries. The next time we meet again, we'll be solving questions under general entries and letter entries. My name is Mensa. Please like, subscribe, comment, and share this video. Thank you very much.